Yeah, I don't think you guys want Skylar to host the show. No, sorry, buddy. And he even forgot to cue the fire. And as an employer, you should never push, right, your employees. But I need to show you what is more important than Skylar, and that is the banks. Which I've told you about this for actually yesterday. I covered it. I'm going to cover it again in a little bit more detail, specifically how the banks are setting up currently to crash your entire beautiful economy and take the stock market with it. In yesterday's video, we were in Bank of America, and the CEO of Bank of America said, "Buckle up, Buttercup." They know what they're talking about. Well, that's because they are in charge of all of this. Well, all of everything. I know everyone's like, no, it's the Fed, blah, blah, blah. I've gone into the bond market 5 trillion times. It's not the Fed. It's the banks. All the Fed does is they just want to pretend like they're in control and tell you they print money, even though they're lying. They just sit there and follow the 2-year. So if you ever want to know on the yield, if you ever want to know where we are going, look at the 2-year yield or where the Fed's going to go. And when those cross, well, Jerome's time is up. Oh, and coming in from breaking news, I know someone in the comments section, like, I can't take it anymore. I'm going all in on Boyle. That's Nat Gas. So if you guys want to trade it, okay, and you're like, I don't know how to trade options, and I don't know futures, and I don't know all of this, you just go UNG, which you are down, because I know some of you yesterday are like, it's close enough, I'm jumping in. You're already down 9%. And if you want to go leverage, well, you're down almost 17%. But that is not why I brought you to this screen. It's way above my head. See the 3-month, 6-month, 1 year. These are all yields on the bond. The bond market controls everything. It is a debt-based system controlled by the bond market. And you have little bonds, you have big bonds, you have corporate bonds, which I'm going to show you in the charts that those are going bye-bye. So be really careful on theirs. If you want to move some money, because on this channel I teach you how to make money in everything, whatever you want to do. I'm just paper trading. But start businesses, and then with that money, right now, a 1 year is almost at 5%, 4.88. And it's this one, it's the, it's the 2. It's 4.461. This is what Jerome follows. So just to let you know how the banking system works, the banks borrow at one end and they lend on the other. The only problem is it's inverted, so they're not making any money. Or scratch that, banks always make money. It's just they're not making money the typical way. But also in the charts, I want to show you how they've tightened lending standards. It's not because they're not making any money. Why are you going to do something if you're not going to make any money on it? Oh, and before I forget, yesterday I was talking about the S&P 500. That would be this. I know all these crazy lines. I said, I'm not feeling this anymore. I closed my position with a profit on this one. See, I went long. Actually, I went long. The other arrow is missing. That was right here. That's when it took off. And then I closed my position yesterday, taking profit again. And I explained to you why. Now on a traditional swing trade, like in my course, also price is going up on that. You will no longer see that at 300. It's going to 400. Actually, all of my courses are going from 3 to 400. So grab it before I bump the price. On this one, this was your beat down, your swing. I actually grabbed it there because it was a triangle. Close my, see the 9 count? That was it. I told you, this is like, it's overextended. Take profit. I was like, yesterday, I'm like, yep, take profit. Normally you'd close when it's 1 candle below the Bravo 9, but my indicators were saying, get the frac out, and that was it. Now we start with a 1. It's a TD. It's TD sequential. If you guys want to know, I call it the 9 count. Goes up 9, you sell or you take profit. Get ready for the beat down and the swing again. All right, guys, so here we go. I brought up the chart for you. This, what you see is when banks tighten their lending standards. We're not going to loan, okay? So that's where we are currently at right now. The last time, and it got really loose, right? When Fed go burr. Okay, so when we were like, oh, lockdown, everything bad, world's going to end. The banks like tighten like crazy, but then within a flip of a switch, they're like, what is the Fed doing? What is governments doing? Never mind, loosen, loan. All right. But now we're back again. So now you are going to see in that gray bar right there, that was a recession. You're going to be seeing one. Well, you kind of see one right there, but this is just pre-made. I'm jumping the gun for you on that. All right, so coming back here, and I want you, the red line is the stock market. So when lending tightens, market crash. Okay, you haven't seen anything yet, and I'll get to some other charts on where I think we're going on this one. Back in 08, gray area right here, that is your recession. Right about here, the market started rolling over, which is about, if I grab my arrow, let's see how close we are. Let's see. So from here, that area, up to right about there. Okay. All right. That's when the market started rolling over, which, yeah, that's about right. And the same thing going back over there, I drew an arrow that they thought was the top, but then they maybe a little lower, a little higher low. So that was right about there. And lending standards continue to increase, and stock markets crash, and we're in a recession. This area right here. Same thing over here. So it's all about debt-based loans, a bond system, and market crashes when lending stops. Market crash, your beautiful little stock market, it doesn't crash. It does like this, right? It bounces on the way down. And going back, I think this is the Wilshire 5000. It takes time. 99, 2000, 2002, 2003, right? It doesn't just go straight off a cliff. 08, that was getting there, but we have bounces on the way down. Oh, and just in case you want to see the actual documentation from the banks, it's their SLOOS report, or SLOOS report, SLOOS. You can Google it there. Look where we're at. See? Tight, getting there. I'd say that's pretty tight. This is like going back to the last tightness and then the 08 tight. And this is your commercial and industrial loans, which they're not a loan in. Oh, and just in case you want to know what kind of demand, respondents reporting stronger demand, not a strong demand. And in case you're into commercial and real estate loans, yep, that's gone too. Not just so much the loans, but also demands. Demands are gone also. Oh, and for some of you that are like, but I still see the housing market's great, I could do 12 videos on it, that it is not. Your demand's not there, your loans are not there, the charts are not there. But like always, the housing market doesn't just crash. I mean, I think Austin's down, out here maybe, I don't know, 10%, 15%, 20%. And since I said it, I have to go find the report for you. Economists.
My next guest has published an intriguing piece titled "The Path to a Soft Landing."
There is no soft landing. Sorry, you guys. Politicians could say it, but nope, not with these kind of lending standards. Economist who called for the 2008 housing market crash predicts another 15% drop in home prices from here. And a lot of this has to do with the affordability. Can you even afford it? The answer is no. Price goes up, can't afford, price comes down. And here is a slightly cleaner chart for you when it comes to the housing market and affordability, okay? We're over here, okay? This goes all the way back to the 80s. Not affordable. So if you think my house is gonna go up in value, well, you should probably think again, because people can't afford it. And actually kind of tripped me out. I was talking to a lender last night. We're just talking about people that want to rent. Come to Austin, rent a 1-bedroom. You got to be clearing about $100,000 a year just to afford a 1-bedroom. Then I asked her, well, what is there other ways? Yeah, they usually have their parents like co-sign. I'm like, and she says, 35% of all applicants have someone else, right, to co-sign, like parentals or a spouse or something like that. But you're looking at like a single dude. You got to make around $100,000 just to afford a 1-bedroom. And a 1-bedroom is around $3,500, and you have to earn, and it's 3 times, so that's 3, 4, 5, 6, 7, 8, 9. You got to make between $90,000 and $100,000 a year just to survive. Well, until you can't, and it all comes crashing down in the deflation scenario that I think. And I know I'm kind of going against, you know, mainstream people like Dave Ramsey that says why right now is the best time to buy a house, and that was 7 months ago.
And here's why, okay? Prices are not going to go down.
Okay, so if Dave Ramsey 7 months ago tells you prices on homes will not go down, you probably should subscribe to my channel and listen to some balance here. Because according to 7 months ago, I don't know. Do you see what I see? I clearly see a lot of red, and I see a line going into my hair, which whatever goes into the hair never comes out of the hair. But getting back to the tight lending standards and what the banks are doing, you're going to be seeing a lot of headlines like this. Big U.S. banks pull back on office and apartment lending. They're tightening. And even B of A says the only thing that's driving this thing is desperate banks. So if you're a desperate bank, well, then you're in there. Coming up really soon, everyone's going to be desperate because it's going to get bad. And the only way to solve this thing is, hey everyone, you guys want some stimulus checks? Well, we'll help you because we're in a recession. That's it. That's your only way. Well, that's the government's only way to get you to vote for them. And my only way is start businesses and sell plastic junk, or become a plumber and then hire someone to do your plumbing, something like that. Again, and I've been preaching that, well, ever since I started teaching high school, 25 years ago, teaching college. Start businesses, trade equity. Sorry, that's all in this debt-based system. It's not pay off your debt. It's not, you know, live below your means, because really soon that live below your means is going to be above your means and you're going to drown. It's just the system. Or you're going to have to say, okay, government, you win. What do you want me to do? Bank of America sees more muni bond defaults in 2023 after January uptick. That means companies are like, hey, we just created a bond. Anyone want to buy it? And then they file for bankruptcy, Bed Bath & Beyond. And then your cute little bond is worthless. For some reason, retail investors run out and go, oh my gosh, they're filing for bankruptcy. I should go buy their stock. No. And the problem with that is you don't know why you entered and you don't know when to exit. Retail, they just don't know. And I always ask you that question. Why did you enter the trade? And when you enter the trade, when are you going to exit? Do you know? Or do you have the indicators to let you know, it's probably time to take profit? Which that's what I do every single day. And I just do little bunts. I'm like, okay, I made 2-3% on the S&P 500. Great. I made whatever, 20-30% on Tesla. Great. You know, I make it going up. I make it going down. And I do get some of them wrong. Just to let you're like, wow, wait, you're not 100% perfect? No, not at all. I'll tell you a lot of the price targets that you have. I'm like, okay, that's a good target, right? It's always good to have a goal. But when conditions change, take some money off the table. Or if you get into a stock, like let's say you want a swing trade, and I've been using this one as an example over and over and over again. I've been saying UNG, okay? And I know people jumped the gun yesterday. Like, that's it. That's enough for me. And I said, no, is it one candle close above the Bravo 9? And the answer is no. And the downside target, it's still, now do I think it's going to hit it? I don't know. I just give you targets. I cannot get my finger, but you see where that red line is? That was from your Head and Shoulders, which people could not believe. They said that's impossible. There's no way. I mean, you got what's going on in Ukraine, Russia, gas, and that's when everyone went long, right? This was the summer of last year thinking they were going to make a whole lot of money in the winter. They got it all wrong, but they wouldn't have if they understood the chart. So I'm just waiting on the swing trade. And it might be a short one. I don't know. It could pop up, okay? I may make 2%, 3%, or I'll break even, or I'll lose 1%, and then I wait. And also, you are so far under the 200-day moving average. That's that white line. Unless you're advanced, I don't like swing trading under that. In my swing trading course, that is where I tell, if you are new, no, you are not allowed to take this trade. Because what's going to happen is you're going to take it and then you're going to be upside down and you're going to say, well, I'll just hold it long enough, right? And it'll just keep going and you'll lose 50%, 75%. And you're like, well, I'll just wait. And the truth is you could be waiting your whole life. I mean, look at this. This is all time. You're up 4%, all time. Well, if you just buy and hold, if you just, wait it out, I don't know. This could be forever. Look, today you're down. The week you're down. A month you're down almost 40%. 6 months you're down 72%. A year to date, almost half. Another year, half. 5 years. You want to wait 5 years and you're still upside down 11%? And here is your perfect example of why I don't buy and hodl. What's even crazier is this isn't even like a stonk, right? Some of you guys are doing this with companies that can go to zero. And I actually use this one as an example. It is a family member. I'm not going to say who it is, but they worked their whole life for this company and gave up half of their okay, make sure you take money out of my paycheck and you'll match it. Yep. We'll match it. Thing was up like 20 bucks, 30 bucks. I don't know. Now it's at 0.00010. Yes, that's under a penny. That's actually under a penny's penny. That's under a penny's penny. Like, it's all gone, all your money, and it's gone. And all I do is I just trade these things to make digits go up and buy the things that I want, and life is good. And then I understand things like macro, right? Which, again, I show you on this channel, and we can go, hey, where do you think we're at in crypto? Where do you think we're at in the S&P 500? All of these, or even your single stocks, which something like this kind of gets tough. It's bigger on the major indices, but we could be at very much right here. That, that bounce, woo, we just want to return to normal. But then I'm like, in a tightening cycle, that's never happened. You've never found a bottom in a tightening cycle. Am I going to make money? Yes. On this, I'm here. Let's make some money while I give warnings, because I don't want you to think, well, you said the market's going to go up, so I'm just going to buy and hodl. No, you could be. It goes all the way back to smart money and then institutional investors and then public. You're still, even though most of the public got out, I think you're all out. You're all upside down. You got out. But for some reason on this last bounce, retail ran back in. Must be it. Everything's going to be okay. The economy, we're going to, soft landing and all this, and jobs are just going to be plentiful, which that's what the governments are telling you. Go ahead, listen to your government and pile in, because you want the return to normal, but what you're going to end up having is fear, capitulation, and then return to the mean, which if you're trading this on the S&P 500, that would be that blue line right down there. And if I were to draw it on the Qs, that is your NASDAQ, I just drew it, it's going to be down there. And just in case you want to trade crypto, I drew an orange line for you, which is down there. That is your return to means. These are your smart individuals, but not so smart if it could go poof, gone. And hopefully you guys, whether you did the course, which is really helpful because then you understand all this. I don't know how you follow my channel and I'm like, oh, and look, it's a triangle. Wow, what's that even mean? Oh, it's the 200-day moving average. What's that mean? I mean, if you know these things, it would make sense. And if you're trading Google, look, the 200-day moving average, what do you think is going to happen? All right, let's go all the way back to, and I love it, great. Well, I mean, to love, hate, right? On Google, actually, any company. Got rejected on the 200, didn't like it. Goodbye, fall into a triangle. What are we going to do after the triangle? Well, we're going to bounce out of it. What are we going to do? Well, you can measure from here to here. Again, I'm safe. I know a lot of people would measure their triangle way back there. I'd say, you crazy sauce. And I would carry that right up into the Lux Algo zone, which I would take profit if I was trading that, and gets rejected on the 200. So if you want to know why Google went down, I know they had an AI glitch, whatever. Regardless of that, these charts over here are going to predict that they are going to have an AI glitch. And actually, this chart looks pretty much like the S&P 500. Same thing. It's like I could do this all day long. It just changed the name. Oh, it's Google. Oh, it's Tesla. Oh, it's Amazon. Oh, it's S&P 500. And how much did you lose? Now, entering into that space in that Lux Algo Zone, also link in the description, you're down 8.5%, and you're going to go lower. Actually, you guys were emailing me. You're like, I want that. How do you get that Lux Algo? You got to pay for it. Sorry. Link in the description if you guys want it. I think they're running a discount, so congratulations. Oh, and just in case you are currently in this trade on Google, if you want to know where it's going to bounce, probably on the 21, right there. Find maybe some support, maybe jump back up, get rejected on the 200, come back down, find support at the 200 weekly. That would be that one. And then quite possibly head even lower. So again, all the computers have all of these things plugged in. If then do that. So it's not just going to go straight down. It's going to hit branches on the way down. Also, if you don't believe me that stocks are going to head lower, believe Market Watch. Believe the bond market. The bond market is flashing a warning that U.S. stocks could be headed lower. This coming in from the Treasury Department and Albert. But like always, cue the fire. Don't trust the news. Look at those charts. Make sure you learn about it. Don't trust Sky. Kid's crazy. And I will see you tomorrow.